You might have heard of Bitcoin and how it's being traded all around the world. The popular rise in blockchain technology and cryptocurrencies have led to some of the world powers planning to adopt the technology trend by digitizing their reserve currencies. China, the US, and EU are all working to create what is known as a digital currency. Terms like DigitalCoin, digital fiat, digital base money, CBDC all refer to the same thing, namely digital currency. According to the Bank of International Settlements, over 60% of the world's central banks have started experimenting with digital currencies. But before we can look at digital currencies, we first need to understand what are the differences between a cryptocoin, like Bitcoin, a stablecoin, and a digital coin. Cryptocoins, like Bitcoin, are decentralized digital assets that can be owned and transferred independently from any central authority, and are fundamentally the separation between nation-state and fiat. Digital coins, or central bank digital currencies, are digital forms of currency issued by a central bank like the US dollar or Japanese yen. They are regulated by a country's monetary authority and are implemented using a database that is controlled by the central bank, government, or authorized private sector entities. Stablecoins are the middle children between crypto and digital currencies. Where crypto tends to have volatile price fluctuations, stablecoins are usually crypto tokens that are pegged against a stored fiat currency or commodity. An example of this would be Tether. 1 Tether USDT is equal to $1. The biggest difference between cryptocurrencies and digital currencies are that cryptocurrencies typically use decentralized control as opposed to digital currencies being controlled by a country's central bank. Similar to cash, central banks would issue digital currencies to allow everyday transactions. So, how is this different from normal money? Fundamentally, it stays the same thing. It just adds a new medium of storage and exchange to traditional money. You can think of it as holding a photo in your hand, as opposed to looking at the same photo but on your mobile phone. So, what's some of the advantages of digital currency? Well, reduced role of commercial banks that don't have to rely on transfer trickery to transfer digital represented cash using third-party fund transfers or payments between banks or institutions, using protocols like Ideal Payments in Europe or WeChat Payments in Asia. It also allows for real-time analytics of central bank finances. It enables faster and easier transactions via mobile applications at reduced cost of financial services, and additionally, compared to crypto coins, digital coins can be more broadly accepted by the general population because they are subject to legal and government regulations. As digital currency adoption grows, it will eventually also become easier to exchange foreign currencies internationally. Well, what's some of the disadvantages then? Digital currencies will reside on your digital wallet that's on your mobile phone, making it very susceptible to hacking or digital theft. It represents a potential barrier between trust and data privacy, and also digital knowledge and access to it. It will also have very little impact on fiat inflation, which is one of the main reasons for Bitcoin adoption. China wants to be first. China will be hosting the Winter Olympics 2022 and will use it as a stage to promote the e-yuan to the world. The e-yuan is pegged to the renminbi, and the Chinese government plans to distribute 1.5 billion USD worth of e-yuan on New Year's Day 2022. They are launching a new transfer protocol called DCEP, the Digital Currency Electronic Payment, to handle all transactions. Cryptocurrencies like Bitcoin can coexist with digital currencies, so a Bitcoin ban from China makes perfect sense to prevent any rollout competition to the e-yuan. But systematically, Bitcoin will slide back into China post-2022 when the Winter Olympics and e-yuan hype cools down. China will be the first world reserve currency to launch a digital currency and use it as a possible stepping stone to become a larger player in the world foreign reserve currency market and increase its global homogeny. Thanks for listening, guys. If you like this video, press like and please subscribe. Have a nice one. Cheers.